following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To master love, you have to practice love. The art of relationship is a whole mastery, and the only way to reach mastery is with practice. To master a relationship is therefore about action, not about attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials up 129, NASDAQ up 17, S&P's up 10, gold contract down $5.40, trading at $13.15 an ounce. Silver down 9 cents, $17.04 an ounce. Light sweet crude up $1.16, $62.89, big number there. Notes, 10-year note down 13 ticks, 123.02. 30-year bond off a full point and a half, 150.09. Both the 10 and the 30 are getting volume on the way down, folks. King dollar up 150 ticks, trading at 92.250. The euro is at 119.32 to the U.S. dollar. The yen is at 112.5 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. In the world of the S&Ps, let's take a look at them. What you can expect, folks, I expect some high volatility coming into this close. We've had high volatility in the NDX 100. We haven't had it in the other indices just yet. So if we start with the future, the S&P futures, bottom line, you're at a higher high. Futures today hit 2760. We're 2756. 2 o'clock was basically the first time we have any selling at all. And we'll see how that straightens out coming into the close. The Dow Industrials, what you have with the Dow. Dow right now, bottom line, all-time high. You're up 130 bucks. You're at 25,413. We take a look at the composite, also at an all-time high, up 18 bucks, 71.75. We go into the NQs, which is the NDX 100 futures, at an all-time high. They're up 975, 66.98. That's got as high as 67.07. What the NDX has done, okay, twice out here today, you had some selling come in the NDX. The first sell down was at 10 o'clock, I believe, 9:30 to 10 o'clock. Yeah, we get down to 66, 67. You did a nice counter trend bounce. You go back up to 66.89. You come back down and test it. The test was on lighter volume. Then we went topside and broke a new high. Bottom line, when you do that, we'll see how we come into the close because that seller is still laying out there. When you take a look at the Russell 2000, Russell 2000 has been the indice, number one, that hasn't hit a high except today. Not except today. Today we broke a new high, okay? It's been having such a hard time getting to that high that you really want to watch this like a hawk coming into the close. The reason being is that a close under 1564.70 would be a failure on price and a failure on volume. Right now you're at 1564.80. If you want to see the correlation inside the ETF market, what you have is this. The ETFs right now, we traded up to a high of 155.50 today in the IWM. A close under that would also be a failure on price and volume because we're not going to do 36 million shares inside the IWM. Thus far, you've done 11.4 million. You're coming into 36 million shares. Gold contract. What do we have with the gold contract? Did it again, folks. This is going to be wild watching this thing shake out. It's rejecting lower price. Didn't break a swing. We got down to a price point of 13.09. You're at 13.15 right now. You've done 316,000 contracts. You were going into 370. So what you get there? You got lower volume. You didn't make the swing, and that's not even a swing point. This is gold has been a one-way trade since December 12th. Bottom line, this is building cause to get up into the 1365 area. Now, let's get to King Dollar, because King Dollar is going to run the gold market. We get over and we take a look at King Dollar, and this is what you have. King Dollar yesterday had nice price move. Held price, didn't have volume. Today what you have is that you actually have both. You have price and volume. We've done 20,000 contracts, good number. You've got to a price point of 92.360, also a good number. We're at 92.260 right now. I got to 92.360, and we're at 92.260. Now, this is where it's going to get dicey, and the reason being is that this is where we broke down from. When we broke the swing, and we broke it with volume, it was 92.375. You can't close over that. That's saying, guess what? The seller's still there. And what I do expect, you're probably going to see here, is that I expect we're going to see a bit more selling inside that as we come into the close. Bonds. Now, here we go. This is intense. You had the 10-year. Take apart the swing lows. I mean big, too. Let's go take a look at this. So this thing started off small this morning. It didn't actually look like it was going to do it. So what do we have here? We're blowing away the 123.12. You get volume behind the move. The real question is, let's see. So 125. You get about a 1.5 ABC down, which would get you into 122.5. So that's about another 15 ticks down from where we are. If we go to the 30-year, we take a look at the 30-year. Inside the 30-year, this also is going right after its lows, 150.10. We've actually hit 150.06, and this is breaking down also. We put this on a continuous contract. It's 147. I know what this number is, 147.07. That's the number. If we broke that, that would be the first time that we broke a major swing since 2000. So that is one long streak. There's no two ways about that. Some of the higher volume stocks in this marketplace, let's take a look at it. You have Micron Tech down $1.98. We have Intel down $1. That's all about the Intel come out this morning and said, hey, listen, these patches can slow the machines down. Microsoft followed it up, really said the exact same thing. It says chip fix may significantly slow some servers. So bottom line is that these chip companies are getting hit, will get hit, all of the above. You stay right there, folks. We have the Dow Industrials up 129. Nasdaq's up 18. S&Ps are up 10. We got our man, Mr. Basil Chapman, coming right up.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials are up 135. We have the Nasdaq up 18. S&Ps are up 10 1/4. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Don't forget, folks, Basil's got a great program here every trading day, 12 to 1 Eastern Standard Time. Now, all the programming at TFNN, folks, you can just go to TFNN, hit live programming, you can go to YouTube, put TFNN Corp in, subscribe. Each and every show that comes up, you're going to get it ASAP. As you're over to our website at TFNN, Basil's also got a great newsletter, The Opening Call. Now, you can get a 30-day money-back guarantee by coming over to our website at TFNN. You go to newsletters right at the top. You go to trading newsletters. You can hit the Opening Call tab, 30 days money-back guarantee. Basil Chapman, what's going on?
Hi, Tom. How are you?
Oh, you poor guy. You got a cold. Oh, my God.
You know, I don't feel bad, but the voice makes it sound terrible.
Oh, you sound good, actually. You sound like, one of those movies at 12 o'clock at night.
Oh, yeah, right. The Living Dead, right.
Yeah, perfect. And it's getting a little warmer up there, right? You guys had some heavy... A little warmer,
yeah. And, you know, it feels so different because we were at -10 the other day.
You're so cold, yeah.
And now we're 20, plus 20. That feels... You're right. It feels warm.
That's
it
amazing.
isn't, but it feels warm, yeah.
Wow. Okay, so what are we looking at here?
So on the left, you've got my daily Dow chart. In the middle, you've got the weekly chart, and the monthly is on the right.
Yeah.
If you look here, I'm just highlighting this green line. This is what I call the Chapman inside track. It means that whenever a price goes to a certain level on the upside or the downside, and then repeats that pattern in an up channel. It doesn't always have to be in an up channel, but as long as it has a price movement that gets repelled at that same trend line resistance, that becomes important. So you can see we had a peak T back on the 4th of December. We went short at about that time. We still hold the intermediate term long position from 22,000 to 90 on the Dow, but this was short-term trade, and it was just very short because within 6 days, 7 days, bam, you went to a new high, and then went right back and hit that trend line once again on the 18th of December, 24,876. Pulls back. We were short for 7 or 8 days. On the 10th day, boom, it breaks out. It used up. I call this using time. It usurps time, but it didn't use price. And now what we've done is we're just bumping up against that line right now.
Look at that,
So,
huh? Yeah.
Yeah, it's just so interesting the way it works. So I'm not sure if we're about to have another consolidation because the MACD is still strong. The stochastic's up at 96.90. 100% is the most you can get. So this is very strong. So my contention is that until the Dow starts to decisively trade under this 9-period moving average, this black line, and since it broke out back, and that was, I think, November the 12th, what was that? On November the 21st. It broke out above the black line, the 9-period exponential moving average. Not once. It's touched it a few times.
Amazing.
Hasn't closed under it once. Isn't that amazing?
It is.
And so that says 25,080 is the support. I would say that if there were closes under 25,080, especially 25,000 over the next week or so, and I would pretty much say that it needs to do it 2 out of 3 sessions to close below that 9-period moving average. Finally, I think you're going to get a trend change. But so far, everything's looking good. And the weekly chart has the same. This is an even longer, look at this. This is an even longer trend line. This goes all the way back to April of, was that this year? No, of 2016. The high, if there's a trend line that I show that has got a very strong resistance that we're coming up to. This is the weekly, but the technicals, look at this, the technicals, the MACD is still strong. Stochastics at 96.79. These are very good technicals, and the monthly made a leg E because it made a new high in January. I've got to move that away, 25, that's gone already. We're already much higher than that. So yeah, so it says to me that until, and you can only start a trend change if the shorter term starts to trend. So in the meantime, for subscribers, we're still along. I had spoken about Bank of America. It's still doing very nicely here. It made a new recovery high today. It's trading at 30.36. Reliance Steel, we still have a position in that. And from the 81s, it's trading at 88.98, hit 89 today. So that's Reliance. The steels, I think, are still very strong. Many of them are becoming a little bit overbought, and I think that's this whole rotational aspect that we're looking at. And we've got a very interesting stock, Chicago Bridge and Iron.
Okay.
And yeah, and that's part of the infrastructure, which I think will be the next series of potential movers on the upside. If anything, if they start to really talk about infrastructure development. So this is trading at 18.10. We're in at about 17.01. Very nice gain, and it's in leg B. So I think this is the type of thing we're looking at now. It's very interesting. You spoke, I did on my show today. I went through all the different yields, the 30-year, the 10-year, and the 5-year. So this is in a leg D. The TNX is the 10-year, and most of the rates are really based on the 10-year, on the important rate changes.
Yes.
And it's up in leg D in the daily. The weekly has a cup formation. I call this left side, right side potential price time match, which says it's 25.46, but the target really is the 26.15 to 26.21 left side highs of earlier this year. But what's really interesting, I think you alluded to this, look at the monthly chart. The monthly chart, I'm going to squeeze this so that you can see it much better. This goes back all the way to the crash of October 1987. Yeah. And that was right, going back even further. Yeah. But look what's so interesting about this. We've been in a trend line, a downtrend, and we haven't broken above the resistance lines at all. And this goes back decades.
And what Basil's talking about, the downtrend in yield, folks, not
yield,
yeah,
sorry.
right.
I'm sorry, yes. Yeah. The bonds go up and the yields go down. They work counterpoint.
Amazing, so right? My God.
It is. And look, here's the 87 crash right there. And right there. And since then, we were actually much higher in yields. I don't know if most people don't remember it, but anybody was getting mortgages and stuff in the late 70s, early 80s. Yeah, 15%, 17%. Oh, it was huge. So now what we've got is a massive down channel. And this is the first time in a long time that we're starting to challenge the resistance level. And if we do break out, that'll be the first time that you've really seen a break to the upside. But in fact, it has to go all the way to 28.30. And we're at 25.46. For me to say this is a big breakout, that's what I'd be looking at. But the signs are that the MACD is improving. The stochastic is holding very nicely. This is the longest we've been in an uptrend that hasn't broken down. So we've got to, I think if anything's going to disturb the market at all in the next few weeks, I think it might be interest rates. It's the fear of what can happen because it's really an unknown.
Oh, man, listen, I seen this thing approaching, 2.5. And, folks, the bonds have been ready to jump off the cliff for, like, the last 5 to 7 years, realistically, right? I mean, and they haven't. Do you know what I mean? Every time that they get into that line, they say, oh, no, hold on. We want lower rates, not higher rates.
That's because someone's backing them up, right?
Yeah. Oh, listen, there's no doubt. And, it very well, Basil, what it could be is that the market's got so used to it, meaning even the Fed, that if the Dow is down 300 points, which, by the way, is just over 1%, folks, they might freak too. Because
they might get them. That's right. That's right. It's so interesting what's going on.
Crazy. Listen, folks, come over to our website at TFNN. Go to newsletters, go to trading newsletters. You can test drive the opening call right here, right now. And, of course, don't forget, every trading day, 12 to 1 Eastern Standard Time. Basil, get some rest. Take care of that voice.
Certainly will.
Okay,
Thank
man.
you very much.
Have a great one. Have a safe one. Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 112. You get the NASDAQ up 11, S&P's up 8. Let's go over to the NDX 100 because they just whacked the NDX 100 again. Now, this gets really intriguing when you get hit twice at the open. And, we were talking about this when I started the show. These traders don't go away, folks, when you have someone that can hit it as hard as it got hit this morning. So we had this morning, just go over it, you got hit in 20 minutes from 67.04 down to 66.67, made it all the way back topside again, hit it again, couldn't get enough juice on the downside, gets to a new higher high, which is absolutely wild, but that's how it works, and they just decided to hit it again at 15:20 or 20 past 3. So we'll see how this shakes out as we come into the close. Let's go take a look at the S&P. And this morning, you know, they were in the S&P somewhat, but the NASDAQ NDX 100 is what they were jamming. If we go take a look at the S&Ps for a second here, we had a high of 2760, so you're down 5 points from there. Yeah, they hit it. See if they can keep it down. This will be interesting. So simultaneously, they would be more than likely an operator, folks. It's not going to be a retail trader. That's going to be someone bigger that's saying, hey, guess what? We think this thing's going south, and we're going to sell into it each and every time that there are bounces out here. If we go into the small caps, the Russell 2000, same setup in the Russell 2000, and the Russell 2000 right now is getting very close to getting that failure going. It's 1564.70, and right now you're at 1564.30. The Russell also had slightly an expansion of volume on this last get-go. What the Russell does have, as well as the rest of them, though, those spikes from this morning do have high volume spikes. So you have a decent probability that they want to get hit, particularly because half hour left into the trading day happens to be a long time, folks, in the trading day. Let's go over and take a look at, well, here, this is pretty cool. I just read this article, XBT. So let's go bring up Bitcoin for a second, because now this isn't said inside this article in Bitcoin, but I'll walk you through this because it's pretty cool. So Bitcoin, out here today, we traded from a price point of 14,152 to 15,385. When the CBOE started trading, bottom line, it was up at 19,000. Gives it up, gives it up in spades also. The first couple of days, well, you talk about fast and furious, it was pretty intense. Let's see, bookmark. I bookmarked this story. This is a cool story. And bookmark. Where's my bookmarks? Give me my bookmarks code. Okay. Okay, here it is. Bookmark. I'm going to have to find it for you next. What it's about is this. Is that the CBOE, CME come across, and they were talking about that company. It's called IG, is doing 20% of the volume on the future market in Bitcoin. What it didn't have in there, and this is, if you have test drove the Nadex platform, you can come over to our website right now, hit the banner, test drive it, do it in the demo account. Bottom line, you'll be able to see, number one, how it moves, but we're talking about defined risk. That's the biggest deal here. Well, what the story is about is that IG, which has 20% of the volume right now at the, and let's go see what the volume is today so I can show you this. So the volume out here today, the CME is 839 contracts. You multiply that down times 5. So you got, what, 4,000 contracts, basically? Yeah. And that 20%, more than likely, folks, is that is traders over in the Nadex platform. Because what you have is that the IG happens to own the Nadex. They're a large firm, spread betting firm in the UK. And that's how you set up the arbitrage. That's the real bottom line. The real cool thing about it is that you don't have to trade at the CME. because, of course, you don't have defined risk there. Bottom line is that you have defined risk on the Nadex platform. So check it out as you come over to our website at TFNN. We go take a look at some of the higher volume stocks out here today. Well, excuse me. What you have Advanced Micros down 46 cents. Micron Technology, that's getting hit like down 5%, down 2.35. Boston Scientific is up $2, 10%, $27. You have a Tiger Corporation, that's up $2.31. That's 69.49. They came in with good numbers. Let's go take a look at Target and see how Target's laying out here. Excuse me, folks. So you're trading $69.48. We put this on a weekly. Okay, so it's made it back inside a larger range. It's positive, that's for sure. Let me put this on a monthly for a second. So on the monthly, monthly also made it back in a higher range. So bottom line, this is impressive. You have, once you made it back inside $65.50, it's like, okay, game can be on now to 79. You know, some of the high flyers out here, you had Amazon hit a whole new high today. That's trading $12.53, up $6.37. We go take a look at Google. Google, almost a new high. Google, 11.27 is the high. We hit 11.10.57. Facebook, 188.90 is the high. Oh, this one's intriguing. It hit 188.80. Microsoft, which has also been hitting highs, the high in Microsoft today, that's a new high, $88.72. So big numbers out here. Some of the Dow stocks, we take a look at it. Well, actually, let's go inside the Dow Industrials and see what the strength is out here. Strength point-wise is good old Boeing. Boeing's putting, look at that, oh my God. Out of the 133 positive points, folks, Boeing's putting 64 of them. Johnson & Johnson's putting 15, Goldman's putting 15, 3M's putting 11. Taken away from it, you have Walmart putting 8 negative points, Intel 7, Verizon 4. Inside the NDX 100, let's go take a look at the NDX. Inside the NDX 100, the movers out here today, Illumina is up 7%. Big number, up $15.94. Gilead's up 5.5%. Express Scripts is up 4%. And Biogen is up 2%. So you got the IBB stocks running. And if we take a look at the laggards, you have Micron Tech down 5%. INCY's off 4%. X-Ray's down 3.7%. And Intel is down 2.4%. Stay right there, folks. We come right back. Last 20 minutes of trading. We have the Dow Industrials up 139. NASDAQ is up 16. S&Ps are up 10. We'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
If you haven't tried David White's weekly investment newsletter, The Technology Insider, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Technology Insider. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 134. You get the Nasdaq up 15. S&Ps are up 9.5. Let's go over and take a look at the energy sector. We go into the XLE. XLE right now trading sideways, down 11%, but basically sideways. We pulled this back a bit, and what you're going to see here, this is going after you swing. Its swing from December of 2016. Now, the low of that swing was 74.36, so you're at 75.31, so you're into it. So probability-wise, you're going to get that high tested, which is 78.45. We go into the XLF. We take a look at the XLF. XLF right now is up 27 cents. That's over its last highs. Bottom line, if we put this back a bit, and that is going after its highs out there of, let's see, you get, 30.97. Credit, watch this. This is pretty cool. I'm going to show you something, folks. Fixed income credit. I found this morning. Credit. I know what I'm going to do. Credit card. Here you go. So I'm going to show you, I had talked about this a long time ago, but I never realized that GE was still so heavily into, on the hook for basically credit cards. So what you had out here is that when we take a look at credit in general, right? We're talking, now I'm just talking credit cards, all right? If you happen to be watching Tiger TV, what you're going to see up there is credit card trust delinquency rates. Now, these aren't defaults. This just means delinquency rates, either behind 30 days or behind 60 days, right? And this goes back for the last 3 years. This is what we're looking at. When I was looking at this morning, it actually, it's like, okay, it's not bad. I'll just give you some ideas, okay? So American Express, people have that American Express cards, right? Bottom line, 3 years ago, it was 0.76 of 1%. That were behind on their credit cards. Now it's 1.5%. It's not bad, right? Capital One. 3 years ago, it was 1.82%. Today, it's 2.4%. Discover, 3 years ago, 1.28. Today, 1.7. You can see those correlations are pretty cool, right? Now, watch this. General Electric. This is a mind blower. GE, 3 years ago, 2.76% were in delinquency. Today, folks, 9%. So if you wonder sometimes, when you go back to GE, what still, to me, still hasn't come out here, and I can't figure out how it hasn't come out. In 2005, 6, and 7, even before that, 2004, 5, and 6, what GE was doing is that they were leasing their balance sheet. and this is like so insane, it's unbelievable. But the way a lot of companies do it, GE was the best one, and the biggest one, rather. And what that meant is that, let's say you and I have a company, you want to go out in the bond market, GE would be basically signing for you. That really hasn't got real clear as to where all that paper is right now. What is clear, however, just looking at that, is that GE still has some huge problems, and they're still on the hook for problems. So let's go to Tom in Plymouth. Hey, Tom, what's going on?
Hey, good afternoon, Tom. How are you?
I'm doing great, brother. Yourself?
Oh, doing pretty well today.
That's a beautiful thing. Yeah, you get a little pop in your U-gas, don't you?
I stayed in it. Yeah, I did. I didn't listen there. I think it was Friday or last week when I called you. I said, no, I'm hanging in here. It can't go. It's not going to go any lower. It was so cold up here this weekend.
Yeah.
Oh, I know we discussed it, but it doesn't always work that way. But I said, I can't. Anyway, so I'm getting out. I get out mostly all afternoon here, but I'm wondering if you think there's going to be a little pullback in this UNG here.
So first, let's go over to the natural gas market. So that's up 3.9% today. You've done 262,000 contracts, which is decent contracts. So yeah, this can get up to $3 now. I mean, that's going to be the consolidation. That's how that's kind of set up. You know, so UGAZ, if we go back over to UGAS, what that sets up is that, yeah, you can get a test of that high, which is 81.44. You're at 71. You know, maybe that's the. I think you said the right thing at the beginning, that you get out today and see what comes tomorrow morning. Do you know what I'm saying? Because I know.
Yeah, that's a dangerous one, like you said.
Right.
Find something else to trade, but I was just. I don't know. I was stuck on it for, I guess, for a reason.
You just wanted to make money. I know. That's a beautiful thing.
I guess that's a good enough reason, yeah?
That's a great reason, man. It's the only reason we're doing this business. Well, probably not the only reason, but bottom line is that is the major reason. There's no doubt, man. Yeah.
Yep.
So you took some heat, and you literally heated up the UGAS. That's the bottom line.
Yeah. Well, the thing is I'm not sure what Thursday's numbers are going to bring, but last Thursday I thought it was going to do something decent, and it didn't. So, who knows?
Well, I think that when we were talking about, folks, is that there's a disconnect between the future price of gas, okay, which is very inexpensive, and what people are actually paying for gas, in the Northeast and in the Midwest. The bottom line is that they were paying almost 50 to 70 times, not percent, times the actual gas that trades at the futures pit. So, to me, that's like, guess what? I know you like these things, but there's plenty of other triples that have.
Well, I got a nice one for you. The USLV, I think, is about to run.
I really, the gold and silver deal is a good deal right now. Particularly, look at this today. This is crazy today, folks, okay? Because you had the dollar, with some real strength. And there's not a lot of strength coming into the close here. It's not bad, but there's not the type of strength that you would have, and it's not holding price. So it's like, you know what? You still have a seller out here in the dollar. And they've been trying to whack gold and silver in a big way. They've done a better job at silver. Gold, they're having a tough time with keeping this thing. Since December 12th, it's a one-way trade, meaning topside. So.
Well, I think it was a couple of years ago. It went down. I remember I was in the USLV, and it went down big in December, and then it roared back for the first quarter of I want to say it was 2015. It could have even been.
It was. I bought a house on it. It was. Yeah. Yeah. If you weren't in that market, folks, if you were in the market, you know what happened. That was insane. That was like heaven. Yeah, I know. Yeah.
I'm hoping that maybe this thing decides to run a little bit shortly. Maybe silver can.
I think we're close. And what we're talking about, folks, is this. See, 2015, December to July of 2016, it was unbelievable. That was the run. That was the run, man. All the equities ran, everything ran. Pulled all the way back again for the next December. The one last year wasn't bad. Wasn't bad. Not like the one in 2015. The one in 2015, that was the best run I've seen in the gold market since 2002. Didn't hit the highs, but as to whatever you bought made money in the gold market in that 6 months. You know, they just all did. So. Cooking, brother.
Thanks, Tom.
Have a great one, man. Have a safe one. You stay right there, folks. We'll be coming right back. We have the Dow Industrials right now up $1.20. NASDAQ is up 9. S&Ps are up 7. And we'll see. Russell 2000 looks like it's having a hard time holding this price. Pretty close to it, but we'll see what happens in the next 10 minutes.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 113. NASDAQ is up 7. S&Ps are up 6. NDX 100, they just hit it again. Looks like it wants to go red. We go into cryptocurrencies for a second, and this one's a great one, folks. Kodak. Of course, most of us know Kodak film company. Bottom line, can't handle film when we get all these cell phones out here. The company, bottom line, instead of they decided out here today, they came out with a press announcement that they're going to start doing Kodak coin cryptocurrencies. Bottom line, what does it do to the equity? If you want to see something that's really bizarre, this is it. This equity started out this morning. This announcement got done at 11 o'clock this morning. The equity was at $3.10. The equity is at $6.79 right now. And the bottom line is that there's nothing behind this thing. So it's like, you know, if you buy something with, I just read it quickly, but bottom line is that, you know, you buy something With dollars, well, they're going to have their own cryptocurrencies. It's almost like our Tiger dollars, except bottom line is that they're saying that it's a cryptocurrency. So it's kind of intriguing watching this whole thing shake out. But there's no doubt that what you have out here is an extraordinary bubble. That's the bottom line. When you get a stock that doubles intraday, what you do have is that you have folks trading it, a lot of folks trading it, a lot of computers probably trading it also. They jump on it quick. Don't get caught in the middle of one of these, folks, okay? Because the bottom line is that if you get caught in the middle of one, bottom line, you can wake up in the morning and it goes right back to exactly where the equity was before it started off. And yeah, one of our tigers is saying in the den, it reminds him of Globe.com in 2000. And it's so true. You know what's amazing about Globe.com? I got a great story about that. The Globe.com, should have been Facebook. And that got started at Harvard also. And I met one of the guys that were behind that when I was up in Boston. And that's pretty amazing. And those guys are greedy beyond belief, too. I can tell you a million stories about that, and then they end up blowing up. You stay right there, folks. We'll be coming back with some numbers after the close. Dow up 111, NASDAQ up 8, S&P's up 6.5. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Get our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. And as Paul would say from San Jose, holy tamale. I like that. Always do your best. Take action on your ideas. Doing your best means to take action. You can have many great ideas in your head, but without an action upon an idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We have the Dow Industrials up 102, NASDAQ up 6, S&P's up 4, gold contract down $5, trading at $13.14 an ounce. Silver down 11 cents, $17.02 an ounce. Light sweet crude up $1.19, $62.92 a barrel. Big bid there. Notes and bonds. You get the 10-year note down 14 ticks, 123.01. 30-year bond off a 1.5, 150.07. King dollar. King dollar up 120 ticks, 92.220. The euro is at 119.37 to the U.S. dollar. The yen is at 112.5 to the U.S. dollar. Our phone number is 927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. This is pretty cool, folks. We go take a look at this S&P, what you're going to see out here. And the NASDAQ today was actually the culprit that started this baby off. What I'm specifically talking about is that, you had the S&P go to a new high, nice high, 2760. You gave up 10 points coming into the close out here. It was the, and you're doing this with some real juice, by the way, folks. Coming into the close, right at 20 of 41,000 contracts inside the S&P. Big number. We get, now you're still at all-time highs. That being said, let's go over to the NQs, because the reason I want to go into the NQs is that what you had out here this morning is that the NQs got sold down fast and furious twice, came roaring back both times, got up, hit a new high after it come roaring back. That trader, that fund, whatever it is, came right back in. And we're down 350, went red. If you go take a look at the small caps, it took them the longest to get to a new all-time high, and guess what? It only lasted for a few hours. The small caps out here, we reached a high today in the futures of 1567.70, which got over the December 4th high of 1564.70. Bottom line, sold them right down. So it's a failure on price, failure on volume, after the small caps have been trying to get into a new high since December 18th. The correlation, if you don't have the futures, if we go over to the IWM and you take a look at it, what you're going to see is that the IWM got to a new high today, $155.50. You closed at 154.82. We did 16 million shares versus 36 million. That's setting up. Can't bust them up. Guess what? Here we go downtown. And what the small caps have, as the other indices do have, from the downdraft that was out there on December 1st, when that was fast and furious, the one-day wonder on the way down. Actually, it wasn't even a full one-day wonder. Went down intraday to 148.75. Ended up closing at 153. Well, that thing wants to get tested. So bottom line, I expect the volatility to get higher, starting right now, right here. It actually started coming into the close out here. We'll see where it shakes out. Notes and bonds. Let's go to the 10-year note first, because what you had with the 10-year note, actually, let me see if I can 10-year note comes down, has price spread, has volume behind the move. Bottom line, rates, the 10-year today, I believe, we didn't hit a high for the year yet. The high for the year is 2.6. Okay, so we're at 2.546. The high for the last 12 months is 2.626. So you're getting close. That's the real bottom line. If we go take a look at the 30-year, what you're going to see with the 30-year also come down hard. We did come down 1.5 points. You have 355,000 contracts out there. We put this on a continuous contract, and what you're going to see is that the 30 years has come down quite a bit to break the major swing. It would be 147.07. The last time that we got into these lows, we broke them. Okay, so this is where we're at. March of this year. So we have to go back that far, folks, March of this year, to have these rates as high as they are right now. So we'll see. That puts that in play, though. That absolutely puts that in play, that it can get tested. Now, let's go over to King Dollar, because what you had with King Dollar also is this. King Dollar yesterday had price spread. Really didn't have a lot of great volume, but it had price spread. We followed through today with price spread and with volume. But guess what happened? What happened, as it tries to go higher, it was getting stopped right in its tracks at 92.310. And 92.310 was the low of the 24th of November, and 93.265 was the low of December 1st. Bottom line, we did 21,000 contracts. This has to make it up over the 92.690 in order to get to higher price. It looks to me, when I look at the metals market and I look at the dollar, that once again this dollar is going to get sold down. And the intriguing thing is that if the dollar is going to get sold down, what very well could happen simultaneously is that these bonds, instead of jumping over the cliff, which they're approaching the cliff, the 10-year is definitely approaching the cliff, they can pull right back. They've approached this cliff, folks, many times in the last 5 years. Each and every time that it looks like that they're going to basically go up on short-term rates, which can affect the whole marketplace. They pull back, the rates go back down again. You know, this 2.5 is a big number, and right now you're over the 2.5. It's a psychological number more than anything. It's 2.546. Bottom line, each and every time we've got up there, it's only lasted hours. So we'll see how this one's going to shake out. Some of the higher volume stocks out here today, this is what you have. You have Bank of America up 15 cents. Micron Tech got hit. That's down 258. You get Boston Scientific up $2.15. Microsoft hit a new all-time high. Closed flat, but hit an all-time high. Target had a big number underneath it, up $1.96, trading at $69.14. You stay right there, folks. We're coming back with our man, Mr. Andy Heck. Dow Industrials finished up 102. NASDAQ up 6. We'll be right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 102. You had the NASDAQ up 6. S&P's up 5.5. Let's go over to our man, Mr. Andy Heck, as we do each and every Tuesday and Thursday. And don't forget, folks, Andy's got a great show right here every Tuesday, Thursday, 5 to 6 Eastern Standard Time. No matter where you are out here, just go to TFNN.com, hit Tiger TV. And folks, an easy way to get us and subscribe, and it's free, just go to YouTube and hit TFNN Corp. You're going to see all the programs right there. Subscribe. You do it right on your cell phone. Each and every time another hour is popping up, you're going to get a little text saying, hey, you want to check it out? And he's also got a couple great newsletters. He's got the Technomental Commodity Report. That comes out once a week. He's got the Daily Essentials, which is his daily newsletter. Now, you can come over to our website. You can test drive either one of those or both of those. As you do that, you're going to gain access to his course, The 12 Essential Lessons for Trading Commodities. Bottom line is that we're already into January, which is pretty phenomenal, because what Andy did is that we did start this in September. So you get over there, you test drive either one of those newsletters, you are going to get the first 5 courses right up front, because you get September, October, November, December, January. Pretty wild. Andy Heck, what's going on?
Hey, Tom, how are you?
I can't believe, and I'm just going over that course, Andy, that we're in the 5th month now.
I know. Time goes fast.
How's that, huh?
It goes fast, baby. It goes fast. So we had a busy day today. These bonds look like they're ready to fall off the edge of a cliff.
Oh, yeah, they're diving, man.
They're diving. 150.04. I mean, that's the weakness in gold today, but I think it did pretty well considering, what they're doing. Technically, they broke down a little bit here. We got down below this 150.10 level. What do we get to a low of? We got to 150.04. So we'll see. I mean, the next level of real support here is 147.07. That would be a big move.
Oh, that's the number. We haven't taken out a major swing since 2000. And that, to me, would be a major swing. That's
two decades.
Yeah. Yeah.
Amazing.
Yeah.
And gold did okay.
Yeah, I think gold did great for the reality of what bonds did, folks. That's yeah. Now we'll see if it holds, right? That's that.
Right.
It's great saying it. Yeah, it did great today. But guess what? When I was looking at the bond market this morning, I was talking to Andy at 10 o'clock, that the bonds, for the dollar being so strong, the bonds were coming down, but they weren't strong. And then someone came in, man, just took them apart. Yeah.
Yeah. But look, silver also around $17. Keep your eye on silver. That's going to give us the path of least resistance. Silver's the one. If whichever way it's going to move, silver's going to lead it. It always does.
Okay.
It always does. I mean, all the spec money comes into silver first. Silver looks like it's turning lower, but silver's always full of surprises, Tom. Yeah,
let's see this. So silver got down to 1694. Yeah, I still like this. It's all right. You're coming into 96,000. You did 91,000 contracts. It's a lot. There's no doubt about that. But look at this. Oh, this is crazy, folks. So the spike that it was coming into, the low, was $17.025. And we're at 17.020. Oh, man.
Yeah. Amazing. Huh?
Well, it's like how does it do that, man?
Yeah. Well, crude oil. Hey, crude oil didn't care about bonds today. Oh. We're blast off. I mean, we traded and closed through a very important technical level, 62.58, the high dating back to May 2015. Oil looks good here. I mean, listen, it's cold out, and energy, certainly distillate demand is up big. Even the forlorn natural gas market went up today, which that thing has been really sat upon, and that's a location, that's a whole nother topic. But crude oil, and crude oil spreads, the cracks, the backwardation, all very supportive here. And now the next big level for crude oil is not in the WTI, but it's in the Brent. Brent is trading around, let's see where it was, about 68.73. $70 could be like a magnet for Brent, and it's only $1.25 above where we are now.
If we get one more day, even close to it like this in oil, folks, oil can be at 75 in a heartbite, which is pretty wild.
We could get a spike here. We could get a spike without geopolitical problems.
Yeah, listen, man, they're buying it. And listen, the other side of that, did you see? Was it yesterday? Aramco come out with Citigroup, and
yeah, they're going to try to buy some natural gas.
No.
I saw that too.
This is for the who's going to be the lead underwriters.
Okay. So listen, they Citibank?
Yes, yeah, Citi, and I think it's either J.P. Morgan or Goldman.
Yeah, well, Citi makes sense because Al Walid owns a big chunk of that.
Oh wow, yeah. I was trying to figure that out, man. Because I'm saying to myself, you don't see, Citigroup. Like, they're big. I mean, they're monsters. There's no doubt about that. That's how they're getting some of their money back. What a trip. That's so smart, though. Yeah, that makes sense. Maybe that's how the shakedown's going to happen.
Why not give it to yourself?
Yeah, right. No, totally. Totally.
I mean, there's big fees involved in this thing.
Huge.
Now, the interesting thing about this, Tom, is the valuation.
Right.
Because, Prince MBS said that he's looking at a $1 to $2 trillion valuation for Aramco. But I've read a lot of market reports that say, hey, Aramco's probably worth 400 to 500 billion. Nothing to sneeze at, but certainly, 1/4 the value of what the Saudi royal family's looking at.
Well, it's got to. What happens, folks? They're going to price it as high as they can, but it's got to be so. Like, how do you pull it out? What do you pull out? Because the correlation has to be, okay, what is the average price of oil going forward the next 10 years, maybe, right?
Well, yeah, and plus, then you take a haircut for political risk. That's not exactly a calm area of. It's not like you're producing oil in Texas.
Exactly.
You know what I mean?
Right.
So, and not only that, they're at war. There's a war going on in Yemen. There's problems in Qatar. There's problems in Iran. So all of this stuff, that it definitely dilutes the value of the share for an investor.
Yeah, there's no doubt about that.
But having said that, with the oil at the highest price since 2014, 2015, with the stock market at the highest price in history, there's no better time than to bring an IPO to market.
Oh, totally. Right. I read a story today, when you have folks inside the S&P, bottom line, big funds are taking their hedges off. They've had hedges on that you're going to get a downdraft. They've been taking their hedges off, man.
Well, maybe they'd be smarter. Instead of bringing an IPO, they should bring an ICO that's backed by their oil reserves and put a coin out there, digital coin.
Just like Kodak, folks. Kodak today, the stock went up 100 and something %. They said they're going to have Kodak crypto.
Right. Right. Hey, Venezuela, it's listen, this is a whole new world we're living in now. Amazing. Really amazing.
Yeah, gasoline got expensive today, too. It's $1.83 unleaded wholesale now.
The cost of the input went up dramatically, but let's take a look at that crack spread. I'll put a chart up here on the crack spread. That crack spread's at 14.06. This is a weak time of the year for gasoline demand, and the crack spread's doing okay.
Okay.
Still mildly supportive, less so than heating oil. The distillate crack's pretty strong. That's up around 23 and change, almost $24.
Stay right there, folks. Andy and I are coming right back. We had the Dow Industrials finish up 102. NASDAQ was up 6. S&P's up 5. Russell 2000 failed on price and volume. Was over the highs. Took 2 weeks to get there. Closed under the highs. We're at 1560 in the futures. Come right back, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials finished up 102. You had the NASDAQ up 3. No, NASDAQ's up 6. S&P's up 5. The NQs did finish down 2. So the NDX 100 had a couple sell downs this afternoon. In this morning, we're talking about our man, Mr. Andy Hecht. We're talking commodities. We're talking markets. Yeah, you know, it's going to be interesting here watching natural gas, Andy, because, you know, we know that there's a total disconnect in between what natural gas trades for and what people have to buy when it's cold because of the location.
Well, it goes, you know, it goes to the course that we're offering on TFNN. One of the topics is location spreads.
Okay.
Location in commodities is everything.
Yeah.
So what you're seeing is, you know, the trading sardine in the natural gas market is the Henry Hub NYMEX contract. And, you know, that's where a lot of the gas is, you know, that's when you trade in NYMEX or when you trade in UNG or any of these ETF products that seek to replicate the price action in NYMEX natural gas, you know, the delivery zone for that gas is Erath, Louisiana. So, you know, there are big premiums and big discounts for other locations. And, you know, in the areas where it's been real cold, up in Boston, New York, places like that, Chicago, the prices for natural gas are a lot higher now because, you know, that's where the need is. In other places where it hasn't been, the prices are at discounts. In Louisiana, it's a different situation. But overall, that gas does have to eventually travel from pipelines. You know, if you exhaust supplies in certain cities, it's going to eventually filter through. We'll see how long this cold snap lasts.
Right. So yeah, let's walk through that for a second. Because when I was reading, when we got that cold spell up in the Northeast, right? You know, we had right now natural gas at $2.95, folks, per million BTU. It was trading at $175.
Wow.
Yeah. So we're not talking percentage. We're talking about, you know, hundreds times more.
Well, you know, it's also a question of, you know, the utilities kind of gouge at times, you know, when they get worried about a shortfall. So, you know, hey, those are the prices that customers are paying, correct?
No, those are the prices that the utilities are paying also. Because what happens is that's why they switch to oil. They can turn and switch to oil immediately.
So that's showing a real shortage of natural gas.
Yeah, because they couldn't get it. They couldn't get it out of it. I guess the Northeast gets it out of Appalachia. And bottom line, they could. So that's why I want to walk through it, because just as you said, I believe that's how natural gas could get priced up, right? Because, so picture, you got all the storage facilities empty, right? We know that, right? It's like, okay, so if you can, more than likely, you can take natural gas out of Louisiana, stop making it up. I don't care if it takes 5 or 10 days. Like, if we're up there running a company, we'd say, hey, okay, let's get some, right? They'll give you a contract to get some up to us, right?
Right.
Yeah, so it'd be, yeah.
So you know, I mean, we could, you know, if there's a continuation of cold winter. Listen, first of all, we're going to get a draw this week. I would say somewhere between 325 and 335 billion cubic feet. That could be the biggest one in history.
Wow, okay.
Which wouldn't be surprised. Hey, it was negative 90 degrees in New Hampshire. You know?
And it doesn't, Mount Washington, yeah, that's beautiful, I know. So, because, folks, it doesn't get, like, to 1 degree and 0 degrees in Boston without wind chill, and it did. Right. That's what it did, you know.
Right.
Oh, here we go, too. Oh, this is good. Okay, hold on. I got an API right now. 1 second. What do you got?
Awesome.
Yeah. Okay, this is only the first one. So, API report, U.S. crude stocks 11.2 million barrels. It's not telling me... You know how this works.
That's a draw. That's got to be a draw.
Oh, it is. I'm sorry. Yeah, it's a minus. It's a draw. It's a draw. Yeah. So we'll have the rest of these numbers in a few seconds, folks. So when this comes out, it takes just a few more minutes to get...
By the way, that's a monster draw.
Is it? Okay. Okay.
It's a monster. Ooh.
Right.
That's
right.
huge.
Because what you know, it's interesting is that when we talk about the utilities, what the utilities do is that they switch from natural gas, even though it's less expensive, when it spikes like that, to oil.
Right.
They have those new plants can do that very quickly.
But you know, listen, oil supplies are also coming down dramatically.
Right.
And by the way, another very interesting thing, I don't know if you saw, last Friday, the rig counts actually went down by 5.
Did they?
Yeah, to 742. And the rigs, the oil rigs in the shale regions, they're facing 2 problems here. One problem is that it's cold. You know, it's very cold. The second problem is probably a more year-round problem, and it's that they can't find employees to open these rigs right now.
Okay.
They can't find experienced employees to put on the rigs. So, you know, while the shale is in the ground, it's very hard to get it out with the cold weather, first of all. But second, the employment situation. They're going to have to pay up a lot to get employees to move to those areas, you know, Permian Basin and the other shale regions. So I think it's fascinating that rig counts are actually dropping. Listen, we're at the highest oil price in a long time here. And, you know, U.S. shale, hey, it's flowing, but it ain't flowing like it should be. You know what I mean?
Here we go. I got all the numbers now.
Awesome.
So we have Cushing. There was a drawdown of 2.52 million barrels. Gasoline, there was plus 4.34 million barrels. Distilled, so this is interesting. That's up 4.69 million barrels. That's unusual.
Well, the refineries are working overtime to make oil products here, especially for the cold. So it makes sense that they are stocking up here. But 11.2, I think that the 11.2 million barrel draw in oil is kind of dwarfs the others.
Yeah, it is. It's saying that's the largest draw since September of 2016. If the EIA data is going to confirm that tomorrow, yeah.
Yeah, well, we'll see. I mean, EIA they've been pretty close lately, Tom.
Yeah.
They have been, you know, working together. So, hey, do you know what? If oil needed a little something here, now that it's closed at just under $63 a barrel, this might give it to it, you know?
Yeah, interesting.
Like I said, Brent is heading for 70.
Yeah, you know, it's amazing. It's amazing that the swings in the oil market are extraordinary. That it's even hard to comprehend, really. Do you know what I mean? It's like, you know, how when you look at this on a long-term basis, folks, it's like the top of this is where it's going to get really wild for all of us. If this is a consolidation, well, guess what? The top of the consolidation is $112. So it's like, really?
Well, think of it this way, Tom. On June 21st, oil was 49.7% below where it is now.
Yeah, yeah.
That's a big move.
It's a big move.
In any market.
Particularly for something that we spend so much money on.
Right.
You know,
that's a very, very big move. I mean, the OPEC oil ministers are certainly smiling here. It's good news for Russia. Yeah. And it's good news for the U.S., for tax revenues and so on and so forth, because now we're the swing producer, certainly of the world. But, hey, it's also a commentary on the global economic situation, you know?
Yeah,
and,
that's
maybe, you know, maybe it's also, you know, I'm trying to figure out how this is going to work its way into the bond market, because it is a sign of rising inflation to some extent. It's also a sign of a very buoyant economy.
Yeah. Well, listen, that'll kick up the inflation. It kicks up the inflation, folks. We just might see rates go up, and unless you know you haven't seen rates go up since 1981, so pretty amazing. Folks, you stay right there. I'm gonna be coming back. Our man, Mr. Andy Heck's gonna be coming back in 20 minutes with you. Andy, thanks so much, man.
Tom.
Look forward to the show.
Thank you, buddy.
Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We go, this is pretty cool. So this story here is about John Gruden. He's going back into coaching, and this is quite a salary he's getting. So Gruden's new contract with football was Oakland Raiders, estimated in $10 million a year. Neighborhood makes him one of the highest paid coaches in any sport, and when compared to CEO compensation, it's not bad either. Gruden, who of course is an ESPN TV analyst, signed a 10-year contract with the Raiders. Big number, man. Returning to the team where he got his first start coaching 20 years ago. Teams typically don't disclose what they pay their coaches, but there were some clues that suggest how extraordinary Gruden's contract is. New England Patriots coach Bill Belichick, as successful as they come, is said to make around $12.5 million a year. Okay, on the college level, University of Alabama, oh, this guy's amazing. Coach Nick Saban, whose team just won the national championship, is paid approximately $11 million a year. And I didn't get to see that. I didn't watch that game. Shame on me. But it's pretty amazing that that freshman came off the bench and did it for them. You get Duke University. They pay their basketball coach $9.7 million a year. So in corporate America, Gruden's $10 million salary would make him the 360th highest paid CEO in the S&P 500. It is not on the level of Les Moonves, who last year earned $70 million as head of CBS. But it is in the neighborhood of CEO Christopher Swift and Boston Properties boss Owen Thomas. Hartford and Boston Properties each boast market caps just shy of $20 billion. The Raiders are said to be worth $2 billion. So pretty amazing that number one, I suspected that Gruden would be back. There's no doubt, but the 10-year contract is really cool. That's a big number. You know, you don't see too many CEOs getting 10-year contracts. Doesn't mean that they can't, I guess, get rid of him underneath that somewhere. But if you're going in to rebuild the team, that's the way to do it. There's no two ways about that. So Andy and I were just talking about the bond. Well, actually, let's go into. I want to go into this TLT. So the TLT is the 20-year plus bond ETF. Now, this has, you know, this came down with volume today. You did 16 million shares. You're going into 10. Didn't break the swing, but you're going into it. 123.90. Oh, no, you did. You did break it. 123.95 was a swing. You got to 123.81. So that's saying, number one, you're going to go down and at least test it. But now what we haven't done, if I put this on a weekly, what you're going to see is that your weekly swing down here is 122.42, 42 million shares. Thus far, we've done 25 million. So you can do 40 million on a heartbeat here. There's no two ways about that. 42 million in 2 days. We've done 25, and that's what it looks like it's going to be going after. What's going to be cool tonight is watching the correlation in this U.S. dollar versus the euro versus the yen. If we go take a look at the euro right now, you know, euro came down, but only came down to its breakout area of this 119 area. The yen, we take a look at the yen, and this is where was a wild card in here for sure, is that most times, folks, when you see the yen get stronger, you are going to see gold go topside, and bottom line, dollar just do the opposite. Well, we didn't get that today. The yen went from 113.18 down to 112.37. And I believe what it had, I don't know if it's fundamentally that they're changing exactly how they're buying and selling this yen. But when I look at it in the aspect of where it's trading now, and if we get down to 110, let me tell you something. You are going to see that gold contract bust through the highs at that 13.65. Now, the yen, the bottom of the trading range in the yen is 110.84. That lines up with the highs in gold right now. If we break that and, you know, get down into this 107, it's going to be pretty intense. Because if I bring the yen back years, what you're going to see is that this baby couldn't handle the top of the consolidation, which is 125. We got to 125 in June of 2015. And, you know, next leg down is 99. There's no reason that it can't get there. So I expect what we're going to see is that we're going to see this volatility go up and go up pretty dramatically. Let's go over into the SPG. Now, so the SPG is the Simon Property. Simon Property is the largest owner of malls in the United States. This baby here, so what ends up happening, of course, is that you have the aspect that interest rates go up. You know, that hurts the real estate business, period. Doesn't have to croak it, but bottom line is, you know, it makes a difference of what the affordability can be. Now, what you had here is that this came down on 1.7 million shares. Well, it was going into 2.2. So this isn't a confirmation that rates are going up. Let's go into the home builders, and we take a look at Lennar first. Lennar out here was down 56 cents, but had a small expansion of volume. You're still going 4.9 million versus 5.6. So that is saying that that's not croaked. You go into Toll Brothers. Toll Brothers made a new high. This gets intriguing. The bond market's going to have to prove that it wants to bust a major swing low. That's how this is set up, because Taylor, TMHC, because see, when you look at these, THMC, when you look at these equities, THMC, they still want higher price. You know, and if you go back to 2005, what you're going to see, by the way, folks, is that the actual home builders, they topped out about a year and a half before everything really fell apart. So it's important to keep your eye on them to see whether people are over their head. Taylor Morrison, is that what I was pulling up? TMHC, I got it, TMHC. Okay, so Taylor Morrison, 2770. This looks like it's at a new high, too. Yeah, it is. No, well, let's see. Yeah, it is. So this is strong, too. And this came into its swing point, with volume. Bottom line, next couple days, we're going to know real quickly where these rates are going. And I suspect you're going to get quite a bit of action tonight, more than likely in the yen. Right now, the yen's down 47 ticks. You're trading at 112.63. Dow Industrials finished up 102. NASDAQ was up 6. S&P's up 3.5. What we did have is that the NDX 100 couldn't hold price. You had the Russell 2000, which has been the weakest. That failed on price, failed on volume. We're coming right back. And, of course, I'm Mr. Andy Hicks coming up with you from 5 to 6 o'clock tonight. Stay right there, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you haven't tried David White's weekly investment newsletter, The Technology Insider, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Technology Insider. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And if we go over and we take a look at Kodak, this is pretty amazing what you had happen out here today, folks. So Kodak turns around and say they're going to get involved in the cryptocurrency world. And the equity... This is intraday, too. This is pretty wild how this shakes out. They put a press release out at 11:50 this morning. The stock's trading at $3.05. By 12 o'clock, yeah, by 12 o'clock, it's at 440. By 12:10, it's at 550. Then it goes sideways until, let's see, so that's 12 o'clock. It goes sideways until 2 o'clock. Then takes off again and goes all the way up to $7.67. This is the weirdest looking chart in the world. Bottom line, don't bite, folks, because this baby right here, you know, who knows what they're going to make Kodak crypto. That's what they're going to be calling it. You know, the thing that's intriguing about this is that brand name-wise, yeah, there's no doubt that you can see brand name-wise they can get some traction. So let's see what they're going to say. They're going to launch Kodak Coin, a photocentric cryptocurrency to empower photographers and agencies to take greater control of the image right management. This is so crazy, man. Big freaking deal. So you're talking about a spreadsheet. Take, you know, basically taking care of photographers and agencies. And what that is about, folks, is that I buy, you know, whether it's Shutter, a lot of us do, you buy images, right? Well, guess what? You know, a Microsoft spreadsheet, Excel does great. It's like, oh, really? You're going to do a cryptocurrency and that's going to make, that just doubled your market cap? Pretty amazing. You stay right there, folks. The man, Mr. Andy Heck's going to be coming up, growling and prowling with you. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it. Step into it, take ownership of it, and fly with it. Everything you need is right inside with you. Have a blast with it, folks. Stay right there. Andy's coming right up. Wow! Go get him, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
This is TFNN, the Tiger Financial News Network. TFNN Headline News Update. Here's Tom O'Brien.
Welcome, folks. We had the Dow Industrials finish up 106. You had the NASDAQ up 6, S&P's up 6, NDX 100. That bottom line, they gave it up. They sold it down twice. Bottom line looks like it's either going to be flat or slightly in the negative. We're at 66.87. Small caps, same deal in the small caps. Small caps, big deal, folks. Small caps have been having a very tough time trying to get up